Hello everyone, welcome to my video. For those of you who do not know me, my name is Lenka Joseph with R&L Tax and Accounting Services. I am an enrolled agent admitted with the IRS, here to assist you with your accounting needs, tax planning, and resolving your tax debt with the IRS. So, the topic for today is as an S corporation, and even if you are a solo member S corporation, do you have to be on payroll? So before we get into it, what is an S corporation? An S corporation can be a regular S corporation or a different entity like an LLC who had made the election to be treated as an S corporation when it comes to tax purposes. So a S corporation is a flow-through entity, just kind of like a partnership. It has some of the characteristic of a partnership, as all the incomes, all the expenses, all the taxes flow through the members. So the business itself does not necessarily pay taxes except for certain exceptions, but really the bulk of the taxes pass through the members, and the members are the one who end up paying the taxes. As an S corporation, if you as a member of the S corporation is actively working in the business, you are required to be put on payroll just like a regular employee. So like I like to say is that you are an employee of your own business. The IRS is pretty strict on the corporations in general, just to make sure that everything is accounted for. As an S corporation, one of the biggest advantages is when it comes to taxes is that you can take the distribution from the profit of the business, and those are taxed a little bit different. That means you don't pay payroll taxes on those. So the IRS want to make sure that, hey, if you're gonna have profit from the business, if you're gonna take distribution from the business, you cannot just withdraw money in and out of the business account and use it at your leisure. It has to be accounted for. There's different taxes as a corporation that you are required to pay. For example, payroll taxes for your employees. As a member of a S corporation, you are required to be put on payroll. So, I know with the partnership it's a little bit different, but with the S corporation you are. Since you can take distribution and you can be on payroll, so the IRS just want to make sure that you're not taking a majority of the profit as distribution, and you locked out on not paying those payroll taxes. What the IRS will do is that, hey, you had $100,000 in profit, for example. Let's say you had $100,000 for profit, and you went ahead and you took $70,000 of it as distribution. Then the IRS is gonna be like, no, 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 no. Majority of that is gonna be treated as you paid yourself. That means you're gonna have to pay payroll taxes on those. So the way the IRS sees it is that if you had to pay someone to perform that duty, how much would you pay them? And that's about the same amount that you need to pay yourself. You cannot lowball it. Let's say that you are going to pay someone $15 an hour and you go ahead and pay yourself $8 an hour. That is a completely no-no. So what I usually advise my clients is that you do a 60-40 or 70-30. Let's say, for example, you had $100,000 in profit. You make sure that 70% of it is paid out to you through payroll, and you can take 30% of it as a distribution at the end of the year. There's a certain amount as an S corporation that you can accumulate when it comes to earning profit at the end of the year, and if it goes above a certain amount, then that's a red flag, and you might lose that election to be treated as an S corporation. So that's why not only you cannot keep the profit in the business, you cannot keep a big amount of the profit in the business. It has to be distributed to the members, but also you cannot distribute majority of the profit to the members, especially if they are actively working in the business. as a distribution. It has to be, majority of it has to be through payroll. Corporations, partnership, and those kind of entities, you have to keep really accurate record keeping. It has to be thorough. You have to make sure that you are planning for your taxes throughout the year, not wait until at the end of the year and trying to find, your records, your documents. You have, like, it's in your best interest. Not only that you can take advantage of a lot of deductions that you can foresee before the end of the year, because as long as if the year ends, you can't take those advantages anymore. And also, you save yourself a lot of headaches, and also a lot of money in your pocket, because you save from penalties, from not not paying your taxes later. But really, the nice thing about it is as one of the members, or even if you're a solo member, if most of your taxes is already taken to payroll taxes, then that's less taxes that you're paying at the end of the year, and you might even be looking at a refund. I know as a business owner, a refund is not really like oh wow, but still, it's better than paying more at the end of the year to penalties that you really didn't have to. So I hope this video helped. And if you have any questions about if you're an S corporation, how do you get paid, how do you set that up, and how to make sure you still have some money in the business to go back to the business, working for the business, and how do you go about that? So if you have any questions or any concerns, please schedule a consultation call with me, and I'm more than happy to assist. I hope this video helped. Bye.